Good evening, everyone. Time for another silver update. This is the daily chart of gold, and I wanted to start here because it's starting to demonstrate a critical upturn in the MACD. You'll note that the trend line that I've been pointing out here for a long time, all the way back from QE2, has really not yet been tested with this latest downturn. Now, the other trend line was penetrated and now has become some type of support for it to rally from. You have a very nice base here that seems to have been tested. So it's holding up phenomenally well for the type of correction that it took. This correction in gold is really just a correction of an overbought condition. If we draw a trend channel and we want to use roughly this spike here, it's not perfect, but if we go roughly from that spike to this next spike, you can see we're continuing in the trend channel that gold has been trading in for a long time. We're actually now rising towards the top of that trend channel. So if the previous types of reactions hold, which were here and here and here, you see that a rise towards the top of this trend channel and here tends to cause a reaction down to the bottom of the trend channel. Now, you had one here, and here, and here, and here, and here. But with this last reaction to the bottom, well, this one didn't reach the bottom of the trend channel. This reaction reached partway down the trend channel and then broke out completely of the trend channel. We've corrected back down into the channel, and now it seems like we're rallying out of this channel. So the picture on gold is extremely bullish in my opinion. Let me clear out the indicators to show you the spike. This spike right here, this is a phenomenal spike that actually doesn't even reach down to this, but you're talking about roughly 1580 down to 1530. So this is a $50 spike. If we pull back, we can see that this was just like silver. This was an overnight spike. You still have a big spike here, so we have to pull out farther and even farther. We're going to end up going off of here, but we're down to the 1 hour, and you can see these are hourly candlesticks. So you had a trade at about 16:15, and 1 hour, another hour, and then back up. So in the course of 1, 2, 3, 4, 5 hours, we fell from roughly 1620 to almost 1530. So almost a $90 correction in that time frame, and that's what creates the spike. Now these spikes tend to be extremely bullish because this is where the dramatic sell-off meets dramatic buying. That's how you get spikes. So your bottoms are always characterized by these spikes. The more dramatic the spike, the more dramatic the rise. So many of these are characterized by spikes. This spike is absolutely beyond anything by a factor of 5 at least that we've seen so far. And you can see we're rallying. So gold is extremely bullish at this point. Like I said, the MACD has now turned up on the red line. We're approaching that point in time where the red line will try to reach the blue line. You can see from this formation that the distance between the red and the blue line is enormous. There's no precedent for this. Even during the 2008 sell-off, there's no precedent for this type of technical picture. So over to the silver, the silver, actually, if you move, well, I've got this line here, so let me clear off the indicators and start again. If you go to the silver, I'll have to remove that so I can slide. But what I wanted to show you with the silver is that if we put the MACD on here and we go close up, you can see that this MACD is rounding up. You see that rounding formation, something similar to this rounding formation. So we're not where we have a rising red line, but we do have a rounding formation. And that is very bullish in that we probably have found that bottom. You can see we're bouncing around 30.77. Our low was 26. So just like gold, we have an enormous spike, an unprecedented spike. On the weekly, you can see the spike is so large, it's unlike anything we've ever seen before. The spike itself goes from about 30 down to 26, so it's a $4 spike. If you look at these other spikes, we've never seen anything like this before. So this is one of the reasons why I'm still projecting $100 silver. I think when we look back on it, this will probably be the reversal, and once you move dramatically, just as we can look back on this area here when we were in that time frame, that seemed like a tremendous move, an overbought situation where it looked like it was going to crash. So let's get to where we're looking just at that. So we went all the way to 15, back down to 9, 8, actually 8.5, and then I'm sorry, I was looking at 2006. So this area here now seems insignificant because we have moved and the range of silver has changed so dramatically. So I fully expect that when we move out of this, and I don't expect this long of a consolidation, I actually think the move's going to come right out like this. But when we start to move, then you'll see $5 and $10 moves, just like in the past you saw $1 and $2 moves. So I'm not changing my projection on silver. I still think that we're going to move dramatically higher once this bottom is firmly put in place. And I do believe that 26 is the bottom. I don't believe that we're going to see any lower prices. And using that idea, I wanted to segue over real quickly to the latest Clive Mond, who did accurately predict the smackdown and has now turned completely bullish. He describes what he calls a Dragonfly Doji formation that has formed in silver, and this is the formation that he's referring to. This entire spike here, the one I pointed out, is a Dragonfly Doji. An enormous bullish Dragonfly Doji ends the route. So I'm going to go ahead and read the end of this. You'll have to read the whole article for yourself, but Clive says, "Now we will look at the truly extraordinary commitment of trader situation for silver, which suggests that with weak longs having been nicely shaken out, it won't be long before it resumes the upward path. The latest commitment of traders shows a truly massive decline in commercial short and large and small spec long positions in silver, which comes on top of earlier declines for several weeks. The commercials have never been long silver and make money by playing the swings, and this is as close as they have gotten to being long. This is the most bullish commitment of traders chart for silver the writer has ever seen. It alone suggests that a stunning turnaround in the silver price before long. How could this be? If we couple this strongly bullish silver commitment of traders chart together with the strongly bullish euro commitment of trader chart shown in the gold market update, and the dollar commitment of trader chart is very bearish, the story it appears to be telling is that the dollar rally may soon be history, which suggests that some kind of breakthrough may be imminent regarding the crisis in Europe. This would logically involve more integration and the commitment to a massive blast of QE, Fed style, in order to mitigate the liquidity problems arising from the insolvency of member states. Needless to say, if Europe graduates to the elite Super QE club, it will be great news for gold and silver and for commodities in general. The last part of this paragraph is repeated in the gold market update. In conclusion, it would appear that silver has bottomed and that we are now in a base building process that may be completed a lot sooner than normally would be the case. Silver and silver-related investments may be accumulated in the accumulation zone shown in the 3-month chart and should be bought aggressively whenever it dips towards the intraday lows of last Monday towards 26, and this would be an excellent zone to go for the leverage of options. On CliveMon.com, we saw the silver plunge coming, as you know, and positioned ourselves to take full advantage of it by buying rafts of bear ETFs and puts, which we offloaded for a massive profit last Monday morning, have spotted the potential reversal, closing out extraordinarily successful trades in ProShares ultra short silver calls. Now, apparently they were in the AGQ, selling AGQ calls. I bought AGQ puts just as it peaked. Our next challenge is to see if we can do the same thing in reverse on the long side. I assume that's probably selling AGQ puts. I'm long AGQ calls at this point. And this coming week, we will be looking at ways to capitalize on the expected uptrend, including ways to leverage gains in the same way that we did on the downside. So, hats off to Clive. He has now reversed and is tremendously bullish on silver. I think he was right on the drop, and I definitely think he's right on the bottom. I don't think that Clive is right about the reason for why silver ultimately is going to explode. Actually, I think, and this is a good point to segue into the main point of this update, is that the ultimate reason will be the incredible story that's going on with Bank of America. Now, I don't know if you've been following this. If you remember, a little over a month ago, I predicted that Bank of America would be bankrupt within 1 month. Now, if you remember, shortly after I made that prediction, Uncle Warren had a revelation in his bathtub and had a meeting with Obama and decided to toss $5 billion of his own onto the fire. Now, he did buy preferred options, and a lot of people have pointed out, or not options, but preferred stock. A lot of people have pointed out that Uncle Warren probably is betting on a government bailout of Bank of America. Bank of America technically is the largest bank as far as depositor assets. It's probably also one of the biggest mortgagers. I don't know those figures, but the move today in Bank of America was spectacular. Now, I don't have trend lines that I can draw, but you can see here in this chart, if I did have the ability to draw the trend line, I would draw it down here like this. The trend line is actually falling, and the move today was a very dramatic move. The last support was around 10, and when they penetrated the 10.5 level here, then they moved down, rallied back, and then collapsed. Then this is when I was projecting that this company was going to go bankrupt. We had the huge rally, and then, but you can see the downtrend line is still intact, and then today we get a move off the cliff, and that's a 10% move loss in the stock price of Bank of America. Now, the $5 level is a very critical level for the price of any stock, because a stock can't be shorted below $5, but also apparently some have reported that certain funds can't hold you when you go below $5. So will they do a reverse split? I don't think so. I think that Bank of America is going into insolvency. And I wanted to cover an article that came out about this issue, and what's going on at Bank of America I can't figure out, but this article is from credit.com. And if you remember, last week Bank of America announced that they were going to be charging $5 a month for all debit card customers. Now, another story that's going on is, if you go onto Zero Hedge and look through the threads, people are constantly pointing out all of the problems with Bank of America's site. And this encapsulates both of those issues. Day after big debit fee hike, Bank of America homepage fails. Now this was last Friday, and they've got some screenshots of the failed page, and this apparently has been going on since Friday. So this is a very disturbing scenario for Bank of America. They announce a $5 increase in their debit card fee, and then their site becomes unreachable. One would wonder, is this some type of electronic bank run that's going on? Or is Bank of America trying to prevent an electronic bank run? Now, I noticed when I was researching this that Obama came out and he excoriated Bank of America for this fee. So that may be why we have this big drop in the stock today, because people have speculated that if Bank of America cannot get all the other banks to go along with charging this monthly fee for the use of debit cards, then this may be it may create a huge backlash, and you may see the depositors flee Bank of America and go to various other banks or credit unions and just withdraw their money. So this is a very dire situation that's going on in Bank of America, and I stick by my projection. Well, I was wrong that Bank of America would be bankrupt in 1 month, but I am going back to that projection and saying that Bank of America is going to go bankrupt. And that's the main point I wanted to bring up by bringing this up, is that I think, considering that this is the largest bank by depositors in America, and that the situation with Occupy Wall Street and the video by Anonymous about bankers being the problem and all this stuff, this is the worst time ever for politicians to support a bank bailout. So if politicians can't support a bank bailout, then who can? And obviously that has to be the Federal Reserve. If the Federal Reserve comes out with some type of bailout for Bank of America, and they begin to print the money by announcing some sort of QE3 or whatever the Fed does to turn this situation around, then I think that we'll be looking at something like the QE2 announcement that we had. And if you remember, at that point, this is gold. I'm sorry, this is silver. But the bailout of QE2 was right here. So if this Bank of America bailout, which I think may be in the works because it seems that Bank of America is rapidly going into bankruptcy, if there is a bailout announced for Bank of America, and I believe that can't be done by Obama or by any politician because the mood of the country is so anti-banker, that if that occurs, we will actually see a rise that is higher in slope than this rise. So we will probably see a rise in silver that will be something like this rise, and we will be back to 50 very rapidly, and possibly up to 100 as well. And we'll talk to you next time.